Josh Brown. You actually did it. I'm kind of surprised. I know you were teasing.
I know I'm going to regret this.
I know you were teasing, that you might do this, and you actually did. Why?
Yeah. I bought it like 8 o'clock this morning. I didn't buy a lot. It's not that meaningful of a position. But last night on Closing Bell Overtime, I talked about some of the similarities between this situation and Netflix. And, Netflix's refusal to listen to what the street was saying about doing an ad-supported version to clean up some of the people that would pay for it but didn't want to pay that much, like potential customers, and a new revenue stream. And they said, no. The stock cratered, and then one day they just said, okay, if we're going to do this, how do we do it? And that's, I think, the story behind Can we get a chart of Netflix up as I'm talking? We'll take Meta off the screen for a second. The stock never looked back. It went from 180. It's over 300 today. It got into that post-earnings gap from the spring, and it is now firmly toward the upper end of the range of that gap. And the only reason that's possible is because there was an about face. Management started to listen to outside voices, and I think that's possible with Meta. Most of Meta's wounds are self-inflicted. I understand there's an advertising slowdown, and that's cyclical, and Meta and Alphabet are both too big at this point to sidestep a slowdown in global advertising. It is what it is. They're a duopoly, and they're gigantic, and they are they have no choice but to succumb to a temporary slowdown in advertising now. Okay, that's fine. Put that aside. The issues with Meta, the spending, the lack of focus, the lack of clarity, all of that stuff I think is fixable. I'm not suggesting it'll be fixed tomorrow, but I think when you look at a stock that's lost $800 billion in market cap, which, by the way, is historic. It's never happened before, may never happen again. That is an incredible amount of market cap to lose. When you look at that, you just say to yourself, okay, so what are they going to do? They're going to keep selling the stock down on the same news? And at any point, is management going to say, all right, let's fix some of the issues here and let's listen to someone besides Mark Zuckerberg's metaverse dreams? Like, I think that there is the potential now for that kind of a turnaround, and that's why I bought it.
Let me just jump in because you've segued perfectly to the very issue of whether they'll make some of the changes that someone like Altimeter's Brad Gerstner, who wrote an open letter to Mark Zuckerberg and the board, suggested they make, which you alluded to, getting more fit, getting more focused. Well, I've just gotten new at noon Gerstner's first reaction to the earnings meltdown that we're witnessing, and it speaks directly to what you're saying they should do and the fact that they don't really seem willing to do it yet. Here's what he told me. The key metrics of the core biz were pretty good. If he, Zuckerberg, kept spending basically flat, which was expected, the stock is up 10%. If he cut a little more and showed any nod to trade-offs discipline, the stock is up 20%. Instead, he chose little regard for shareholders and went all in with unconstrained spending into the face of an uncertain economy. This isn't about short-term stock moves. These decisions materially hurt his own chances of success. The best people in the world do not want to work at a company that feels like it is continually losing. Altimeter obviously supported major investments in AI and the metaverse. We simply recommended extending the runway on those investments to better match revenue and expense and avoid this huge loss of trust. He obviously disagreed with that, he being, once again, Mark Zuckerberg. So, Josh, given what you said, now given what you hear from Gerstner, this is a show me that you will make some of the changes that we shareholders are suggesting you make. What are your thoughts?
Well, it's very difficult when the founder, CEO, has all the voting power. And that is the way that this company was set up. It's the way it came public. It's the deal that every long-term shareholder made when they signed on, when they bought the stock. There are other companies in the same situation. However, there are 80,000 employees in that building, and every one of them is compensated with the stock. So this, things that are unsustainable and cannot go on probably won't. So I don't think, despite the fact that he has all the power, despite the fact that Cheryl's not there whispering in his ear anymore. I think at a certain point, the loss in market cap, which, by the way, in reality on the ground is not just a Wall Street story, but it's an employee compensation story. It's going to become too big, too obvious, too noticeable to continue to ignore. And so there probably will be some sort of an about face. I don't know when. I don't know what shape it will take. But if you didn't own the stock, I don't own the stock from 300, 275, 210, 180. I'm not in it. So I can come in today and make the bet that this guy doesn't want to burn his own house down.
Right.
It's as simple as that.